story and M&A more broadly in the U.S. David, what do you think of this story? Nissan is a struggling automaker, and a lot of this has to do with China, China's emergence as a major producer of automobiles.
Yeah, absolutely. So this is a big deal here for the auto industry. And of course, I think it has broader implications globally. Let's just look at the auto industry. This will allow Honda, combined with Nissan, to be one of the top 3 or 4 players on the planet. And as you rightly pointed out, the world is facing huge competition from inexpensive models that are just waiting to be exported from China and flood markets worldwide. Not sure that we'll ultimately be able to hold those back. So, what you've got here, Japan corporate structure, very conservative for decades here. And now they're finally waking up to the fact that they need to make some big changes if they're going to remain competitive. So I think that it shows that car makers just worldwide may start to get together. But even if you're not in the auto industry, you're sitting in Europe. You may be in a different industry. You may be saying things that we never thought were possible may now be allowed to be possible because of the Chinese competition, because of the U.S. competition, the fact that global stock markets outside the United States have pretty much done poorly, particularly relative to the U.S. And so I think that this could kick off a whole new wave of merger and acquisition. Of course, I do think one of the benefits, in my view, of the incoming Trump administration is they will be more flexible in allowing companies to get together if it's going to provide efficiencies which can be shared both with consumers and with stakeholders.
What sectors of the U.S. economy do you think are best poised for a wave of M&A if the Trump administration takes the posture you think it will?
Banking. I mean, when you look at the number of banks we have in this country versus other countries, we are overbanked here. And of course, the investments that are required to keep up to speed with the technology that people expect, the fact that we're going from, bricks and mortar branches to, using online ways to access our money and do our financial transactions means there can be a lot of consolidation. And of course, most banks have not done well relative to the rest of the market over a long period of time. Many of them are trading at or below book value. It would make all the sense in the world for consolidation to be permitted. And I would also point out, looking over at Europe, you've got UniCredit, who keeps accumulating shares in Commerzbank in Germany. That's a no-no over in Europe for one bank from one country to take over another bank in another country. But obviously, they wouldn't be doing that if they didn't think ultimately perhaps something can happen along the lines as we saw with the automakers in Japan.
What would you want to see in a merger from the point of view of an investor? What would you want what kind of benefits would you want to see flow to the acquiring company?
Yeah, absolutely. So you want to look for a plan which would permit savings to be passed back to consumers, but also, to the extent that there's overlap in operations to reduce expenses. And of course, to the extent that they gain more scale, they may be able to get better borrowing costs in the market and so forth when they're borrowing as a financial holding company. And of course, it may allow them to then more profitably introduce lots more technology just to make all the banking transactions so much more efficient. So you're going to be looking at geographic areas. Obviously, we believe that some of the fastest growing areas are in the South and in the far West and so forth. So financial institutions in those areas may be particularly attractive for acquiring banks.
David, thanks a great deal for a couple of great conversations. David Dietze is managing partner at Peapack Private. He joined us from New Jersey. Let's take